Hi everyone, thanks for checking in. It's Adam Coburn here at Low & Co, and today we're looking at the Wellington real estate market, analysing the data and checking out the trends, looking at the month of January 25. Happy New Year oh no, this is not the first one. Take that back, not Happy New Year. January 25 versus the last couple of Januaries and looking at the trends. So look folks, overall Wellington values have been soft again. Wellington market is struggling in terms of values. Message to sellers is that before the new year, we were already experiencing large amounts of stock on the market by sort of recent historical norms. And in January, we saw a lot of stock come to market, a lot of new stock come to market. And so, it's made the situation a little trickier again. We have got a lot of property on the market. All that new supply, all that existing supply makes it hard to compete with the other competition for the buyer demand that is out there. It's not a straightforward market. The abundance of supply is making it tough out there for sellers. So the message conversely for buyers, of course, is it's a great time for you as buyers. There's a ton of choice out there. Please get in amongst it and make the most of these opportunities. Median sale price in January 750, last January 760. Broadly flat, down 1%. I've been saying for a long time now, since the middle-ish of 2022, that median sale prices are going broadly sideways, roughly flat. Goes up a little bit, then it comes down a little bit, but the movements are pretty minor. If you look at the red line there, that's the 6-month moving average. If you follow these videos, you'll know that I don't pay too much attention to the median sale price because it reflects underlying mix of properties sold as well as the actual values of properties. So to look at the underlying values of properties, the best guide is the Real Estate Institute House Price Index. So let's dig into that. We'll start with the league tables here. Wellington still has the auspicious privilege of leading the league tables in that we have fallen further. Our values in Wellington have fallen further since the peak of the market in late 2021 than any other region in the country at almost 25%. We were down almost as low as 26% down. That would have been about 2 years ago now. We had a little bit of a recovery in 2023 leading up to the election. After the election, we saw that eroding again. We saw a little burst in the late 2024, and then in the last month or two, we've seen that eroding again. So, but overall, almost 25% down as at the end of January, compared to 21.5% down for Auckland and 15.7% down for the country. So we've still fallen further than any other part of the country, unfortunately. Over the last year, we've also suffered the biggest drop at 4.4% down versus 2.2% for Auckland and 1.4% down. And over the last 3 months, look, we're about in the middle of the pack there, 0.7% down over the last 3 months. There's varying degrees of weakness, some slight growth, some slight value falls in various regions across the country over the last 3 months. So more of a mixed bag over the last 3 months, depending on where you're looking. So let's look at Wellington region in particular. So there you go, you can see the graph there. That orange line is the one you want to pay the most attention to. So you can see we had that precipitous fall in values coming out of the peak in late 2021. The bottom of the trough kind of was May, June 2022. From there, the falls got less severe. And throughout 2023, as I said before, leading into the election, some decent sustained recovery. Then after the election, the orange line, as you can see, drops back down again, a little bit of a recovery late last year, and then the last few months softening off again. 4.4% down over the last year, 0.7% down 3 months, 1.4% down over the last 1 month. So just looking across the different territorial authorities, the main ones around Wellington City, so that's Porua, Upper Hutt, Lower Hutt and Wellington City over the last 12 months. You can see varying degrees of weakness, but all 4 of those territorial authorities are weak. But look at that, 6.9% down in Wellington City. So Wellington City definitely suffering greater value drops than other parts of the Wellington region. Over the last 3 months, similar story, 1.3% down for Wellington City, more variable across the other regions. And if we focus now on Wellington City itself, you see the shape of the graph is slightly different. Overall the same trend, but a bit more variability there, more of a sawtooth approach, and we can see deeper troughs and higher peaks. But the trend is the same. Late last year we saw a little bit of recovery in the city, and we've seen that falling away again in the last couple of months. But look, pretty interesting I find, over the last 5 years, so that's since COVID, or since just before COVID, January 2020, the average growth in Wellington City for house prices is less than 1% per annum. So broadly flat in Wellington City over the last 5 years, even taking into consideration that ridiculous price growth that we saw coming out of COVID. So that's probably a surprise to a lot of people. Let's look now at new supply coming to the market. So 757 new listings in January versus 580 a year ago and 527 2 years ago. So a big increase in the amount of supply coming to the market in Wellington in the month of January. So you can see that bar chart there, big strong growth for January. And when we compare it to the January average, not only is it stronger than the last 2 Januaries, but the January result this year was significantly more supply coming to the market for the month than is typical in a January. A lot of property coming to the market last month. And you can see there, compared to 12 months ago, 31% more. Overall, in the last sort of 15 months or so, generally we have seen more supply coming on than the previous 12 months, and that is why we've had a softer market, a tougher market for sellers, prices getting eroded a little bit, because relative to the previous year we've seen more supply coming on, and that has not been matched by a significant, the same degree of increased demand. What about number of sales? So in January, 341 sales versus 319 a year ago and 265 2 years ago. So similarly, we're seeing more sales in January than the previous 2 Januaries, more by a little bit than a year ago, and more than quite a bit more than 2 years ago. Bear in mind, folks, that January is a relatively low sales volume month. We get a lot of new stock coming to the market in January, but it doesn't really start selling until February. So mostly what we're seeing in January sales is properties that came to the market last year. And so for the same reason, you tend to get a longer duration to sell in January. So it's a low volume month and typically a long duration month. But nonetheless, more sales in January than the last 2 Januaries. Unlike the amount of supply coming to market though, which was greater than what we typically see in January, on the number of sales front, we're still not up to what are the norms for the month of January. So the supply coming on is still exceeding the relative number of sales taking place. So again, these are not great news stories for sellers. How long does it take to sell? Bear in mind just what I said before, that January tends to be a longer duration sale month, as I explained, because a lot of the sales that are taking place were listed prior to Christmas. But 59 days versus 46 and 62 in the last 2 Januaries. So quite a bit longer than last January, not quite as long as January 2 years ago. But again, you look at that blue bar chart, you'll see there that at 59 days, we haven't seen many months at all in the last 10 years or so where it's been at that level or higher. We did get back in very early 2023, we saw it hit a peak of 69 days. Other than that, it's very, very unusual for it to be 59 days or longer. So there's no question that in January, the duration to sell was definitely long, and 59 days compared to the January average over the last 10 years of 46. So it was definitely taking a long time to sell real estate. Inventory, the amount of supply on the market as a function of the rate at which they're selling. So the way to interpret this is how many weeks would it take to sell everything that's on the market if things continued to sell at the same pace and property stopped coming to the market. And 16 weeks in January versus 12 weeks a year ago and 18 weeks 2 years ago. So more inventory than a year ago, not quite as much as 2 years ago. Of course, 2 years ago was a very tough market. And again, you look at the graph there, the red line, you can see inventory was consistently falling away to quite low levels of inventory heading into the election. After the election, that inventory increased, and we've seen it overall decrease in the last few months there, but January in particular, back up again. Long-term average is 15 weeks, so it's 16 weeks, only just longer than the long-term average. So by that measure, we're in a fairly balanced market. It doesn't feel balanced though. Why is that? And I suggest that is because over the last 10 years, we've had 7 years worth of boom times when we had very, very low levels of inventory, followed by 3 years of higher levels of inventory. And so overall in the last 10 years, we've seen an average level of inventory of about 10 weeks. So compared to what's kind of in our recent memory, 16 weeks is significantly longer than 10, and that's reflective of the fact that it does feel like a tough market compared to, I suppose, recent memory. Number of listings on TradeMe, 3,255 versus 2,632 a year ago, 2,715 2 years ago. So 24% more than this time in February a year ago and 20% more than 2 years ago. There's a lot of supply on the market, folks. And look at that graph there, you see the blue bar chart. It is a long way back in May 2015, since we have seen more supply than we have on the market at the moment. So even after the peaks of, even more supply now than the peaks in the market supply that we saw in sort of early mid-2022 and again in early-ish 2024 a year ago. So it's been a very long time since we've seen this much supply on the market in Wellington. And if history repeats itself, the amount of supply we see in February is not likely to be less. If anything, it's more likely to be a little bit more. So there is a lot of property on the market. So that makes it tough for sellers. That's great news story for buyers. There is a ton of choice out there. Make the most of these conditions while they last. So in summary, folks, Wellington values, no question, they have been weak over the last year, especially in Wellington City, not quite so much the case in the Hutt Valleys and in Pororua. New listings were up strongly. We had a very, very big January in terms of new supply coming to market. Sales volumes have been rising, but only gently. But I'm encouraged by the fact that over the last 2 years or so, sales volumes have been rising consistently. Not aggressively, but consistently. Duration to sell is up significantly in January, back up to 59 days. It's been a long time since we've seen a property taking that long on average to sell. Inventory levels are back up to 16 weeks after a couple of months of down more like 12, 14 weeks. TradeMe listings are up, and in fact, we've got more supply on the market than we've seen since May 2015. Sellers, values are lower than a year ago, especially in the city. The degree of the amount of supply out there on the market is making it tough to compete for the buyer's attention. And so the message for buyers is there's still a lot to choose from, getting amongst it. Big thanks as always to Real Estate Institute and to realestate.co.nz. Big thanks to you also, of course, for checking in. If you need any individual advice, of course, please feel free to reach out, Adam at Low & Co. Otherwise, have a great month. See you next time.